Welcome to the Skilled MBA Finance Case Study Series. In this edition, we explore the strategic crossroads faced by Felipe Serra, managing partner at Supera Capital. As Supera V, their fifth private equity fund, nears the end of its life cycle, Serra must decide the future of Cecilia, a high-performing portfolio company specializing in strollers and baby accessories. With growth still on the horizon, yet the clock ticking on the investment period, the firm must weigh value maximization against timely exit. This case dives into the core tension between portfolio growth and fund discipline, highlighting how timing, reputation, and market readiness intersect in private equity strategy. In February 2021, Felipe Serra, managing partner at Supera Capital, faces a pivotal decision. Supera V, their fifth fund, nears its life cycle end, and Cecilia, a standout performer, demands attention. Known for strategic exits, Supera Capital must decide on Cecilia's future, balancing portfolio growth with fund lifecycle constraints. Cecilia, acquired in 2018 for €85 million, was a family-owned business with a strong presence in Spain and Italy. Through digital transformation and product line expansion, online sales surged by 70%. EBITDA grew from €15 million to €28 million, with current valuation at €210 million. Cecilia is outperforming projections by 25%. Cecilia's strong performance and market growth potential present a lucrative opportunity, with an anticipated €70 to €90 million value increase over 3 years. However, Supera V's impending expiration and underperformance create pressure for timely exits. The dilemma. Should Philippe exit now to enhance fund performance or hold for greater future gains amid a rapidly evolving competitive landscape? Supera V's actual internal rate of return has lagged behind target projections, intensifying the need for robust returns from remaining investments like Cecilia. This underperformance heightens pressure on the management team to optimize exit strategies, balancing immediate fund performance with potential long-term gains. The decision hinges on whether to capitalize on current market conditions or hold for future growth. The premium baby products sector is set to grow at an 11.2% compound annual growth rate through 2026, with the European market potentially reaching €4.8 billion by 2025. Industry transaction multiples have risen from 6.5 times to 8.2 times earnings before interest, taxes, depreciation, and amortization, with strategic buyers paying premiums for digital-first brands. Cecilia's e-commerce revenue is growing at 35% annually, with expansion into Northern Europe and the United Kingdom. Exiting now offers a 2.5x return on investment, enhancing Supera V's internal rate of return to 19.5%, aligning with targets. It streamlines the portfolio for Supera 6 fundraising and ensures timely capital distribution to limited partners. Strategic buyers include European conglomerates, Asian manufacturers, and North American consolidators, with valuations between €200 to €220 million, mitigating post-pandemic market risks. Holding longer could elevate the valuation from €210 million to over €320 million in 36 months. This includes launching a new product line, penetrating the United Kingdom market, and potential strategic acquisitions. Management's initiatives might boost returns to 3.8 times invested capital, making a compelling case for an extended hold period. Creating a special-purpose vehicle, SPV, to acquire Cecilia from Supera V involves an independent valuation and a new management fee structure. Limited partners, LPs, can choose to roll over or cash out, considering secondary transaction costs of 5 to 7%. Limited partner sentiment varies. Some prefer exit, others are willing to roll, while some decide case by case. The third option involves a partial exit through a secondary sale of 60%, realizing €126 million in proceeds and returning 1.5x to limited partners immediately. Retaining a 40% stake maintains governance rights and future upside. A co-investment vehicle allows interested limited partners to increase exposure and brings in selected external investors, balancing immediate internal rate of return pressure with long-term value. Evaluating key decision factors is crucial. Super V's performance impacts Super V's fundraising. Limited partner relationships hinge on liquidity needs and transaction history. The competitive landscape, including new entrants and Cecilia's growth, must be assessed. General partner economics, such as carried interest and resource allocation, are vital for determining the best strategic path forward. Governance considerations are crucial in managing potential conflicts of interest. Key issues include valuation methodology for continuation vehicles, resource allocation between funds, and fairness to exiting versus continuing limited partners. Establishing an independent committee and involving the Limited Partner Advisory Committee ensures transaction fairness and approval of continuation vehicles or extended hold scenarios. Balancing value creation and realization is crucial in private equity. Mastering fund structure mechanics, including continuation vehicles and secondary transactions, is essential. Developing exit strategy frameworks involves evaluating timing, structure, and buyer universe while managing stakeholder expectations. These elements are key to navigating complex fund situations and delivering timely returns within lifecycle constraints. Philip's decision involved selling a 65% stake to a strategic buyer at an 8 times earnings before interest, taxes, depreciation, and amortization premium, while creating a co-investment vehicle for the remaining 35% with select limited partners. This boosted Super F's internal rate of return to 21.3% and delivered a 1.6x return on the exit portion, demonstrating the power of creative structuring and transparency with limited partners. Skilled MBA simplifies private equity challenges into actionable frameworks. Our upcoming case studies include digital transformation in portfolio companies, environmental, social, and governance integration in investment decisions, and cross-border mergers and acquisition strategies. These insights are designed to equip future investment leaders with the tools needed for effective decision-making in complex scenarios. Thank you for joining us at Skilled MBA Mobile, plus 91-87553-00795 at symbol, skilledmba.com. Email, support@skilledmba.com. Website, www.skilledmba.com. Stay tuned as we break down the complexities of finance, strategy, and investment decision-making.